head fake trading Tesla, particularly the options, is our topic for today. And I think you'll find the insights useful in your investing and trading process. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you'd like tips and tricks to better investing and trading with Tesla, please join us on a daily basis. We offer shows on our Patreon page that are not offered in this channel, as well as classes over there as well. We also want to remind you that this is a copyrighted broadcast. Any use of the information provided here is prohibited without permission. So, for the last couple of months, there's been a phenomenon happening with Tesla where the stock price seems to go through a cycle where Mondays tend to be up days, possibly into Tuesday, and then for the rest of the week, things seem to start sliding down and down until we get to the low point for the week, usually sometime Friday afternoon, and then we restart this process on a weekly basis. So pretty much over the last, let's say, year, we've experienced this cycle, I would say, up in the 60 to 70% range. In certain time bands, like over the last few weeks, this process has been happening perhaps in the 80 to 90% range. And so it's been interesting to watch this process. One of the things I've been thinking about doing shows on is the idea of having shows that are targeting just investors or just traders, because some of the behavior of good investors, traders wouldn't want to do that, and vice versa. So it makes it kind of interesting to sort of design shows around sort of better investing in general, whether you're a trader or investor, because you're blending two different worlds that really don't exist with each other. So what triggered this show today is there's a concept called a head fake. So the basic way to describe it would be you're looking at a stock, let's call it Tesla, and all of a sudden it opens up very strong in the morning and you're thinking, hey, this is terrific, let me get in now. It's making a run. And then once you buy it, half hour into the day or so, you've got your position set. All of a sudden the stock kind of goes sideways. And for the next few days, it actually goes down. So if you're an investor, it's not a big deal because you got plenty of time for it to recover. But if you're a trader, it's a pain because now you're in this position where, okay, I took my position out, the stock is down slightly. What do I do now? Because if I hold on, I might be able to recover my money. If I sell now, I take the loss. So it introduces all these sort of unknowns, and therefore it makes it very difficult to figure out what to do if you're already in and the stock is down. So this brings up the fact that there's one of the members of our trading group, and one of his favorite terms is a concept called a head fake. So basically, what I just described, you're buying in thinking the stock's going to keep going up, and it actually drops, or vice versa. You're selling puts or buying puts, expecting it to continue to fall, and it actually rises, sort of destroying the value of your position. So I read something today, and if you want to go over it, it's called the head fake in ESPN, that I want to co-opt over into the trading space. So what happened is there's a story that describes a group of, or sort of a collection of investors, we'll call them, but we're dealing with, in this case, bookmakers. So what happened is there was a basketball game that happened, I guess this was a month ago, and what happened is that the group of bettors were trying to figure out what was for sure going to happen in this case. And what they determined is that in this All-Star game, and I believe it was a women's All-Star game. So usually All-Star games, what happens is that there's not a lot of defense being played. Everybody's showing all their offensive skills, and they just run the court like crazy, scoring a lot of points. And so one would expect then that as another all-star game, sort of, you'd see the same thing. In this case, the game was between Olympians and an all-star team from the WNBA. So the kind of question is, well, what was going to happen? Was it going to be another all-star game where they score a lot of points? Therefore, the upper levels of what the final score was going to be was going to result in a high number, or was it going to be a very defensive-minded game? So the argument that they came up with was that they didn't have to worry, in this case, about high point totals because the Olympic players were going to play a lot of defense because they're trying to grab playing time based on efforts that the coaches might see they've made to both play D and offense. And so they correctly surmised that the under would be the number that shows up, not the over in terms of pricing. So this part of it is pretty easy. The fascinating part that made it a head fake was that there's a target number of 250 as the over. And at that point, 247-ish was where the over was in terms of number of points. So what these guys did was they put a bunch of money into the over at 250 points. In particular, at one sports book that was offering that trade or that price point. What then happened was that all of a sudden the other sports books, seeing that 250 point and a number of people putting money against that over, other sports book embraced that number as where things were going to go. 2 days later, this group of gamblers then went very large in on I call it the put side, but in this case, they went for the under, and they were targeting, I guess, below 245 points. And the reason they were doing that is they knew that the under was the goal that they were going to have, but what they wanted to do is keep raising the over price higher and higher that a lot of people were getting in at, because this set them up nicely to be able to buy huge numbers of under at better prices. So what ended up happening is that the price of the under, not only did it come in under, it came in 19 points below what the under was supposed to be. So they actually made a killing on this trade or this skillful investment of cash, if you will. So I wanted to review this because we've had a narrative going relative to the structure of Tesla's trading week. Usually we have an up day Monday, possibly into Tuesday, and then Wednesday we kind of go sideways, and once we get into Thursday and Friday, it tends to be a down day with the lowest price point for the week ending up sometime in early afternoon. So after reading this discussion of in ESPN, one of the things I've sort of come up with is a question mark, which is the Monday pop for Tesla simply head fake trading by seasoned traders on Wall Street? So I'm kind of bringing this up because what's trending to happen is that you get that first Monday euphoria of, wow, for example, this week, Tesla's stock price went from the 685 level all the way up to $710 a share. And there's this whole feeling that you're getting like, uh-oh, there might be news out that we've missed, etc. This looks like it. The stock price is going to make a run to 750 or something like that. So what then happens in this cycle is the stock did its nice run yesterday, and now all of a sudden you're seeing a whole bunch of people buying calls, 720, 750, 740, all these higher numbers, even 700s, and there's this sense that, hey, this could be it for Tesla, and you need to be in on it or you're going to lose some money. So we're now into Tuesday, and all of a sudden the stock price, it sort of ticked up pre-market and was on the open, and now it's kind of slightly going sideways. And based on the logic of this whole process, we end up with sideways between now and Wednesday, and then starting Thursday into Friday, we end up dropping below 700, heading for the mid 680s again. And so there are two ways to look at this. One way to look at it as we've been looking at, is, oh, if they pin this stock on a Friday, meaning if they artificially hold the stock price down on Friday from what it should be, then Monday we'll have a nice pop-up like we did this Monday to suggest that this is going to be a great week for the first couple of days at least, and then we go from there. Well, another narrative that you could put around this data flow is to say, what if this is simply a head fake, an attempt by market makers to lure a whole bunch of people in on Monday, and it gives them the whole week to wipe those very people out that had that euphoria going on Monday. And if you thought along this line based on the data flow that's available, totally fits. Part of the reason it fits is that the market has been a little bit unstable. The bias has been kind of negative relative to COVID and what's happening with the economy. So not only do they get the benefit of the dropping prices driven by good technique for them from their trading, but they get the benefit of the market crashing, alternately crashing, coming back and crashing. And now their trading is blending in with the market trends. So this whole thing ends up being very lucrative for the folks that are doing this, but very non-lucrative for the people on the other side of those trades. And I've been slow to do news shows on our trading discussions that we usually do because the pattern has become so obvious, and the only time we seem to bounce out of this is when there's big news like numbers of earnings or other things that have broken out to really move the stock in a certain direction. Other than that, we've sort of been maintaining this pattern. So what I wanted to introduce today is the whole idea of, instead of saying, look, Monday is a great day after a pin because the stock price is up, what if the people are saying, hey, we're going to use our profits from the pin on Friday to artificially create a day, maybe two, of up for the stock, and then we can cycle all those positive buyers into a recycling bin of losing money through the rest of the week. Now, this is Tuesday's show, and we're going to find out more about this as we get to Friday, but I wanted to just introduce the idea because we created sort of a discussion about how the pin works relative to Fridays. I wanted to introduce this idea of the head fake that's used in gambling over to head fake Tesla trading. And then one can then have a better understanding of what's really going on, because once you understand and we have this pattern going on a regular basis, you can actually trade either side of this, but it's nice to know what the market makers are trying to accomplish, because you can sell calls, you can sell puts, you can, obviously you can try to ride the purchase of puts and calls here in this process, but I just think it allows you to take one step forward and be a more informed investor / trader in this situation. Now, I just wanted to, just a reminder, this is copyrighted broadcast. Please do not use any of this information without permission. I also wanted to note that we'd like to ask you to like and subscribe if you would, to help support the channel and allow us to provide better information in the process. So I further wanted to discuss, well, how does this play against people who are long-term investors versus short-term traders? My answer to that is that if you are looking to build your position, now last week several of my viewers were making an effort to buy shares once it got back into the 650 range. As those guys are making their moves in this fashion, long-term investors are going to find opportunities to do purchases, and based on the process I described, you can kind of pick out on a weekly basis where the low is and frankly where the high is going to be for the stock. So what do I think is going to happen for the rest of this week? Obviously, I think that we're in that sideways zone between Tuesday and Wednesday, and then we start going south as we head out the week. The other note to make here I find interesting is that what's the most fascinating part of Monday and early morning Tuesday being the apex of Tesla's price typically on a weekly basis? Answer is that it turns out that if something happens on a Monday, you have all the way till Friday to jack the market, right? So if you'll notice in this whole process, there's never or hardly ever a tendency where the peak price for the week for Tesla is on a Thursday. And it fits the profile as I just described for this whole thing. And the reason I believe for that is that if you have a peak price on Thursday, it limits your ability to pin the price on Friday, because moving all those points is harder over multiple days, or it's easier over multiple days versus in the same day, sort of jamming the stock negatively. So I think that it's been very clear from the data, all that I just described over the last month or so in terms of what's been happening, if you X out what happened when earnings came out. So, does Tesla tend to break out of this pattern? Absolutely. If there's major corporate announcement or earnings or something like that, there is a breakout from this pattern. But without it, it's just blatantly, obviously clear. And the addition to what we've presented previously now is the head fake component of Tesla's trading, where we're seeing this, everything pops up on the Monday and you're thinking, hey, we're in the zone, this is about to happen, as happened yesterday. And then all of a sudden the steam that was there is disappearing. And it's my belief how frequently this has happened, that we've entered head fake zone. Can we get out of it? Absolutely. The problem right now is, for this week, I don't see us getting out of it anyway. And therefore, I believe that that's what's going to occur. So I want to thank you for taking time out to join us for the Tesla portion. We're now moving on to our health tips. Just wanted a reminder, core training, highly recommended. Don't eat within 2 hours of going to bed minimum, 4 hours best to avoid acid reflux and potential cancer. We also wanted to remind you about getting out in nature, exercising, etc., because that's a great opportunity to build mental and physical health in the process. I always like to include the fact that you don't want to eat more than a small salad prior to lovemaking, because this facilitates less blood flow to your stomach and better blood flow to the rest of your body. A footnote to all this is that we actually interviewed about 200 doctors in different specialties for all the suggestions we've presented in our health tips. So if you'd like to add to the information that we provide as a professional in a certain field, we'd actually love to have it, but we're very careful in the source of the resources, and we've even been tested on it by the head of one of the top medical schools in the country, and he confirmed the specialties were accurate. Now, I have some close friends that I've developed over time on this channel, and you definitely hear me play a couple of notes on my guitar on a regular basis. One of the doctors that we interviewed works at the NIH in New York, or NIH in DC, and what he shared was that by learning to play an instrument, learning to dance or going dancing, something of that realm, you actually start working your neural networks, your brain power, a different way. So one of the recommendations I would make is your guitar is $34 on Amazon. It takes about 15 minutes to learn how to play Ode to Joy, which is one of the songs I usually play here. And I've had many friends of the show start doing the leg lifts we talk about or other things. But the recommendation I want to make for you here is please take time out to get a guitar off of Amazon and get in there and put in an hour a week to learn a couple of songs and just play a little bit, because I think you'll find that mentally, sharpness, etc., I think will stick with you longer. At any rate, the one other thing I wanted to cover on the health tips is there's something that I heard on NPR this week, and there's a book called Beyond Alzheimer's, or Getting Beyond Alzheimer's. There's a doctor at UCLA who indicated that Alzheimer's actually starts in your 40s and becomes more and more pronounced as you get into your 60s and 70s. And there's actually some diagnostic tests you can do to determine if you're headed down that road. But he's arguing that by early identification, you can mitigate all of the attributes of Alzheimer's through certain processes that they've developed. So I was really impressed. There was a show about the fact that there's a new Alzheimer's drug that's very expensive, and it's not proven to actually work very well. But a lot of people are taking it as a last resort. And I just wanted to note to you guys that I heard this doctor speak. It was awesome to hear that there is a way to deal with that illness. So if you have family history, etc., I just wanted to highly encourage you to both get the book, check out the doc at UCLA who specializes in this, as well as implement some of the processes they've described, and you can end up not having to deal with Alzheimer's as you age. And I think that's really neat. At any rate, this is Greg for Teslafaninsight. Thanks once again for joining us. I want to say shalom as opposed to salam. A Muslim, Khoda Hafiz, Farsi, Strajicha, Russian, Ni hao ma, Chinese, Kumbawa, Japanese, Namaste, Hindi, good day, our friends in Australia, Hey do, our friends in Sweden, E bueno, e la vita, Italian, or ciao, and in Jamaica we say enough respect, walk good. Thanks for joining us. Have a great day and bye for now.